welcome to my YouTube channel. Um, it's Ndando and I'm back again. I just want to complete the correction of the net profit situation because I couldn't find the previous paper to make a part 2, so we're just going to run through what we did in part 1 on the previous video. And so what we have here is we have a plus, minus, multiply by, say, another plus, multiply by, say, another minus, multiply by, say, a plus, multiply, say, another minus. And so that is equals to equal to a plus, a minus, and another plus. And so, like we said the other day, this part represents income and expenses. So expenses denoted by minuses, income denoted by pluses. And so this part, that's the treatment in the income statement. And this is where you make your correction of the given amount. And so, yeah, so we have 4 items that we need to look at. So we have the deferred, I'm not sure if that's correct spelling, deferred income, prepaid expense, accrued income, accrued expense. And so for the correction of the net profit, these 4 items, 2, 3, 4, these 4 items fall under this equation. And if anything else is outside of this equation, you treat it as normal. Say, for example, your income tax. If you have an income tax, it's obviously, well, depending on the scenario, it's obviously outside of these 4 items, and you treat it as normal. So income tax is obviously subtracted, or interest on loan or something is obviously subtracted. And so for this scenario, deferred income or income received in advance, so basically this is a liability. And so let's look at this situation. Deferred income is an income, so it's one of these pluses. And then the treatment in the income statement. So what do we normally do with the deferred or income received in advance? We normally subtract that. And so we have a plus and a minus, and then that's the income in advance, or deferred income is the same thing. And so prepaid expenses is the next one. Just take that. Prepaid expenses is the next one. Prepaid, you paid beforehand, or you paid extra. Say, for example, you had a water and electricity bill that is for 12 months, you paid for 13 months, and so this becomes your asset. And so underlying this part, you have expense. It's an expense, and so it's one of the minuses here. And then prepaid, how do you normally treat it in the income statement? Prepaid expense, you normally subtract it. So it's a minus, it becomes a plus. So prepaid expense. Alright. And the final 2, accrued income. So it's one of the pluses. And yeah, I think this one is self-explanatory. So it's this one. So accrued income, in a sense, if you trying to make sense of that, is basically income you have yet to receive. And so for example, you have a tenant. There's 12 months in a year. They paid 11, and there's 1 month missing. And so you're expecting to receive that. So yeah, for this one becomes your accrued income. And then this, obviously, last one. Sorry about that. This becomes your accrued expense, right? And so the same thing goes for accrued expense, but this time you are the tenant. And so obviously in accounting you're always taught that you are the business. And so as a business, you are renting, say, a factory or something, and you paid for 11 months. You haven't paid for 12 months. Is that 1 month missing? And so yeah, that 1 month missing is an accrued expense. And so obviously an accrued expense and accrued income, we always we always add it. All right, we always add it. There's no there's no subtraction because it's added to the year end, you know, net profit. I hope that makes sense. And C, it says refer to information C. Use the table provided to calculate the correct net profit after tax. After tax is very important because that means tax was not taken into consideration. Please understand that tax was not taken into consideration. Net profit after tax for the year ended 30 June 2021 indicate plus for increase, minus for decrease. So remember, the first thing that you do, you write 1 July 2020 to 31st June 2021, right? And so that's very important. And so we have a net profit. It says net, well, information C says the net profit before tax 4,918,950 was calculated before taking into account the correct or correcting the following. And so let's write that down. We have 4,918,950. Alright, we're gonna work with this guy. And so we have information I, audit fees. Very simple. Audit fees, for the word fees, it's an expense. It's the first statement. And so audit fees include 123,600, which was paid in advance for the next financial year. So that's very important because for the next financial year, remember the prepaid expense. How do you figure out what a prepaid expense given an adjustment? And so it's an expense that has been paid extra or has been paid for the next financial year. And so the words next financial year indicate this is a prepaid expense. And so prepaid expense is very simple. According to in the start of the video, according to the start of the video, we had a prepaid expense type of adjustment, and so that basically you just add 123,600 to the net profit that you're given. And so 2, it says repayments for the loan are fixed at 35,000 Rand per month, including capitalized interest. And so as you know, when they say including capitalized interest, that means the interest is added to the original amount of the loan. Say for example, we have 400,000 or 400 bucks, and we have an interest of 10%, and is when they say the interest is capitalized, and so 40 bucks or 10% of 400, 40 rand is added to the 400, so it becomes 440. That becomes a new balance after the interest. Yep. And so for this one, it's very simple because there's a table that you need to memorize. So we have opening balance. This is a table. We have interest repayment. We have the closing balance. Alright? And so interest is added to the opening balance. A repayment, when you make a repayment, is obviously decreasing the loan amount. So, in accounting, brackets indicate a minus, right? So, typically, going down, this added, subtracted to get that. But now, when you're going back up, this, you add that, you subtract that to get that. So you do the opposite of what's on here, going up. And so we look at the balances that we're given. We have the opening balances. Opening, how do we know it's the opening? Because we did the timeline. We figured out that the opening or the start of the financial year is 1 July. So with opening balance is 4,175,000. All right. Interest we're not given, and then the balance at the end or end of the financial year is 4,028,000. And so how do you work given the information? And so a very important note here is the repayments on the loan are fixed at 35,000 per month, including interest. And so we do not have to calculate the interest. That's what we need to find. Sorry about that. We need to find the interest, and so we do not have a given amount for the interest, and so we have the repayment, which is it says it includes a capitalized interest amount of that, and so meaning basically this repayment of 35,000, basically how do I put this in simpler terms? This 4,175,000 includes includes the interest in a sense. Okay, basically 35,000 multiplied by 12. There's an interest in that amount, and so how do you find that? And so it's very straightforward. You take 35,000, you multiply by 12. That should gives you an amount of 420,000. And so you plug that in here, 420, and then you work backwards. So you take this plus this, and then minus that, also minus that. Remember, you're trying to find interest, and so you basically taking this and replacing it with that, trying to find the interest, and so that's how you always do it, all the time. Going down, you add, subtract. Going up, you subtract, you add. You change the signs of everything when you go down or when you go the opposite direction. And so what you will get. So we take the 4028 000. Now we plus 420 and then minus 4417. We get an interest amount of 273,000. And so what do you do with that interest? Remember, interest is outside of the four special adjustments. Let's call them that. Four special adjustments we did at the beginning of the video. And so 273, you treat it as normal. And so interest is normally subtracted, right? Interest on loan in the income statement is normally a subtraction. And so what do you do with that? Minus 273. I hope you guys understand. These are very simple adjustments. And so the third one is the loan. We have the capital amount, or the rent amount given there. So it says rent of 74,000 Rand was received from a tenant for the period 1 July 2020 to 31st August 2021. This has been recorded. That's very important. This has been recorded. This amount takes into account a reduction of 750 Rand per month from 1 May 2021. The year-end adjustment has not yet been made. And so sometimes accounting students get confused with these long paragraphs. You just have to break it down. We are told that 74 was received from a tenant for the period 1 July 2020 to 31st August 2021. And so you have to count. You cannot just assume that it's 12 months. But in this case, counting from July 2020 to 31st August 2021, that is exactly 12 months. And that 12 months is split into the reduction as well. You have to take into account the reduction. And so looking at the first method, you take 750 Rand, multiply that by, you count from May to August. So May, August, September, May, June, July, August, sorry. So that's about 4 months. That should give you 3,000 Rand. Alright. Now, here's the very important part. What do you do with that 3,000? Because this was a decrease, meaning this 3,000 was subtracted because this adjustment has already been, has already been recorded. So the 3,000 was already accounted for, meaning it has been subtracted. Remember, what we're trying to get to here is the principal amount before the decrease of 750 Rand per month. So we take the 3,000, 74,000, we plus it because it was a reduction that has been taken into account. And so the opposite is true. If this was an increase that has been taken into account, you subtract it. Alright, so we have 77,000. Alright, that's 77,000. You have to divide it by 14 months. Alright, because this ranges from 1 July 2020 to August. So it starts with our year end, it goes past June, which is already 12 months, and then we have July again of 2021, and then August. And so June is the 12th month, July is the 13th month, August is the 14th month. And so you divide that by 14. Alright, you should get an amount of 5,500. Now this is the sorry about that. So 5,500, this is the principal amount, or amount before decrease. And so what is the amount we're looking for after the decrease? Very simple. After the decrease, we have 5,500 minus 750. That's right. You should get an amount of 4,750. This is the amount after the decrease. Why are we looking for an amount after the decrease? Because the 2 months outside of our financial year are part of the months that the decrease happened. Remember, the decrease happened from 1 May to the 31st of August of the year 2021. And so June and August 2021 are the months where the decrease happened. Alright. Now we need to account for the 2 months that are outside of our financial year. So you multiply this by 2, you should get an amount 9,500. 9,500, that's the amount of rent received in advance, right? And so remember, rent received in advance is deferred income and is part of the special adjustments. Remember, it's an income plus treatment in the income statement minus final treatment is a minus. Alright, so income received in advance is a liability. That's why you need to subtract that. And so you're going to subtract 9,500. This is method 1. It's quite long, but when you get the hang of it, you will move quite quickly. Multiplied by x minus the decrease. And so basically we have 1 May 2021 to 31st August 2021. This is where the decrease happened. So how many months was this? Remember, May, June, July, August. That's 4 months. Alright, so it's very simple. 14 months. That's something you need to take note of. So we have 10 months x. This is amount before decrease plus 4 months x minus 750 gives us 74,000. I hope this makes sense. For 10 months there was no decrease. It was a stable amount, let's call it. And then for the 4 months, remember, this goes past our financial year, June and August. So 12, 13, 14 months. So 10, these months, these are the months. They should uh, be equal to the total number of months. So 10x and then 4, you multiply it by the decrease. Remember, we do not know what the amount is, right? So we have plus 4x and then minus 3,000 is equals to 74,000. And so we have 14x is equals to 77,000. Obviously x being 5,500. Alright, remember, this is a principal amount. And then how do you find the decrease? This is the decrease. So x minus 750, we take that, 5,500 minus 750 is equal to 4,750. I hope you guys understand. And then obviously you need to figure out, or multiply it by the number of months that were outside of our financial year. So multiply by 2, you get you 9,500. I hope you guys understand. And so remember, this is an income received in advance. We did the analysis, and then it came to a negative 9,500. Now I hope you guys understand. The corrections above, it was determined that an additional 85,250 is still owed to SARS in respect of income tax for the year end. Now, here is an important part. Remember, I highlighted that net profit after tax. That part means that net profit after tax. It means the tax was not taken into consideration. Let us look at our information. SARS income tax provisional tax of 1,200,000. That tax was not taken into consideration because we need to find net profit after tax. And so what do? We take that 1,200,000, we add the supposed additional tax of 85,000. 85,250. Alright? And so obviously we have 1,285,250. What do you do with that? That's a minus. That becomes a minus because that is your tax. And so the summary of everything that we've done. So we are going to take the 918,950, and then according to 1, we add that audit fees, 600 if I can remember correctly, and then double I. Obviously that one was the interest on loan, 273,000, and then triple I, that is the rent income. Remember the 9,500 minus 9,500 income received in advance, and then IB, the income tax. It's minus 1,285,250, and then we come to a correct net profit after tax, 3,474,800. That's an easy 12 marks. Marks according to the question. Yeah. And yeah, thank you so much.